All right. Welcome to the beginner's trading session. Today is Friday, August 16th. And I was about to say, based on some of the homework assignments that we got out of the elite group, I kind of wanted to go over, um, I kind of wanted to go over marking up your zones. So for those who are new on the call, let me see who's new. Who's new? Lexi, are you new to the group? Is Lexi new to the group? Yes. So how long have you been trading? And how long have you been trading? And if you've been trading for some time, what is your trading strategy? I'll put the chat over here. Hey, TT.
Hey Kimmy, how's it going, everybody?
Good, good.
Good.
Okay, so you've been trading since 2020. Okay, like most of us. Are you from Ruby's group? Okay. So, and then let me see. Um, Tammy, how long did you say you've been trading?
Maybe 2 years, but I just jump in and out of crypto. So I chase green candles. I don't really trade. I FOMO.
You say you trade crypto? You only trade crypto?
No, not only, but that's where I got my start.
Oh, okay. And
Yeah.
how long it's been, you say?
Uh, at least couple years.
Okay. 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 Palmer, I think I know about everybody else. Palmer, how long you been trading?
Just uh just 2 years now.
2 years. And what is
Yeah.
your Tammy, what is your trading? What are the for everybody I just asked, what is your trading strategy?
Oh, I use the breakup structure.
Okay, so you do like break and retest?
Yeah, breakup structure. Yeah.
Okay.
I don't really have a strategy. I always jumped around, but I do trend lines and channels. I've always kind of stuck with those.
Okay. I love a good trend line. That's
I do too.
okay. So I am going to actually go over my strategy and I'm gonna write it down just in case you all want to write it down as well. So oh shoot.
Hey Kim, before you get started, I got a question.
Yes, hey Will.
What's going on? Where are your Zoom recordings at?
Where am I
Because
zooming?
they're recordings. Where are your
Todd,
recordings located?
Todd posts them on his YouTube. The Friday
Okay.
class. Yeah, he posted
Okay.
on the YouTube.
All right.
Yeah,
That's fine.
I started naming them with Kim, like naming the beginner traders the BTS, or Todd calls it the BTS with Kim. So you can kind of see which videos are mine and which are not. But yeah, they're in the Zoom link. Let me double check before I
No, I see BTS on the channel on his YouTube, so I just be trying to make sure.
Oh,
I just
yeah,
didn't
yeah.
know.
Yeah.
Yeah, okay. I didn't know if this was your Zoom link or his. I just didn't know because I know you had your own, so I was just.
No, this is my Zoom link because I can record from this link. I can't record from Todd's Zoom link. So,
Okay.
so yeah, but I send it over to him to post to his YouTube.
Got you. Makes sense. I was just curious on that. Okay.
Yeah.
All right.
So I am going to go through now, and like I said, I love a good trend line, but I like to trade from one zone to the next zone. So, and I usually base my zones off the daily. And let's see. Anchor text. Let's see how this works. Hold on. Okay. So the first thing I do is I look at the weekly and the monthly. And the first thing I want to try to do is identify the market structure, right? So based on higher time frame, it has been bearish for a very long time. Starting back in 2013. So I'm going to write this down. So on the monthly, I identify overall market. I identify because structure is a little different. I identify the current overall trend. And I'm gonna tell you why I changed that. Okay. So if I'm looking at higher time frame, the current structure is this here. So we're currently between this high. This is higher time frame, right? And these lows here. So all this is in between this zone, this high, and this low. Does everybody understand that part?
Yes.
Okay. So between those zones, and like I said, because we're on a higher time frame, so because I've identified this higher time frame swing, which is where we are, I can then fib that move to see how far we're probably going to come back down to. So the price is probably coming down to this 78. Right? And it will still be within the realms of this higher time frame swing. So even if price pushes up, it can come up here, come up to this trend line if it wants to tap it again, and then continue selling down this way, right? So that's based on the monthly. But I can see based on the weekly, we're probably buying up at this moment right here. So price is likely moving up here. So once I go down to the weekly, like I said, I love a good trend line. I personally use the wicks of the trend line. I mean, to map my trend lines versus the bodies. So I don't do this here. I do this here. Okay. So based on this here, price broke. And like I said, I do market structure and price action. Price broke here. Price broke this high. So we know once price starts breaking the highs, you're going to get a pullback. There was an imbalance here. There was the institutional candle here. I personally look for the institutional candle. If, as you can see, it's already been mitigated, but I'm sure once I go down in time frame, I can find an unmitigated. This one has been mitigated, this next candle. So price, I would have been looking for price to come here to take my trade.
So when you say unmitigated, you say you mean institution, you mean order block, right?
Well, when I say unmitigated, I mean,
I'm talking institutional candle.
oh, institutional candle. Yes.
Okay.
Yes. Look, I'm saying yes. I'm trying to figure out how to explain it. It can be an order block, but as you can see, this has already been mitigated, right?
Oh yeah, I know what a mitigated order block is. I know what you mean by that. I was just trying to figure out what you mean by institutional candle.
It's usually the last, if it's bullish, it's usually the last down candle before the up move.
Okay.
So sometimes it may not look like a order block. I'm trying to see if I see one that does not look like an order block. Like for this one instance, this one here, like price pushed up. It didn't break the high, but it didn't break this low. So price pushed up here and pulled back and then pushed up and broke this high. So I would have been waiting for price to pull back to this institutional candle, which was the last down candle before this up move. That makes sense?
Mm-hmm.
And it's not, well, if you put these two candles together, yes, it's an order block. But if I'm on the daily, if I'm on this daily, let's see if on the weekly is, if it's, see, not even on the weekly, it's not a order block. Let's see on the monthly. On the monthly, it's an order block. Well,
No.
I don't consider this an order block, but
No.
Yeah. You understand,
Okay. I
right?
understand what you're saying.
Okay.
The last candle before the up move, or if it's
The
a
last
down move.
down candle, yep, before the up move.
I got you.
And that was the last down candle before the up move. So, so once I see this, once I see my swings getting broken, so this like was the last swing, and then price broke above here, then I'm looking to see where price could come back to. And then we have an imbalance here. And I'm just going to mark up. There's an imbalance, but what I like to do is mark up we're on a higher time frame. The zone, the high, the key level. That's what I want to say. The key level. So price broke all of this here. So here was an area where price came and tapped multiple times. And key level for me is just a area of support and resistance. So as you can see, I brought this over so you can see like price came here, pushed away, price came back, pushed away, price pushed out, came back here. This zone right here is a strong key level. So I generally like to mark up my key levels to see where price could price is attracted, the key levels are like magnets for price to come back to. Levels of support and resistance are like magnets for price to come back to. So once you start getting these breaks of these highs, if you didn't get in on this move up here and then take it to, you always want to just take it to the next level, right? The next zone, which is here. So you would have taken it there, and this is what I call my zone to zone, like trading from zone to zone. So on the, let's go to the, I want to mark this so I don't forget where I am. Right here. Okay. So I generally work from the 1 hour. Watch the charts from the 1 hour. Okay. So once price, let's see if I can make this. Okay. Once price broke out. Okay. Once price broke out here, what I do is I wait for price to come back and give me confirmation that it's going to start buying up. And what I'm looking for is just some internal breaks of structure here. Now, because I'm on the 1 hour, let me just say this. Because I'm on the 1 hour, once this 1 hour candle close, and then this 1 hour candle close, then I'm looking for some kind of bullish momentum, right? The next 1 hour candle close, no bullish momentum. The next 1 hour candle close, no bullish momentum. Now that price is under my zone. So if it's above my zone, I'm looking for buys. If it's below my zone, I'm looking for sales. Okay. So once price broke through this zone, then I can go down to the 15 minutes. So now that it's below the zone, I'm looking for possible sales. So I go down to my 15-minute. And I should have kept my little thing on. Where was it? Fiddlesticks. Hold on. Forgot where I was. Hold on. I was somewhere up in here. Okay, let me put this back on so I won't lose it. Okay, 15-minute. Oh, phooey. Okay, let me see if it'll give me on the 30-minute. Okay, we on the 30. All right, so now generally I go down to the 15-minute, right? So once this has broken through, I'm still looking at market structure, right? So let's look at market structure. And these are internal swings here. And then price broke below this structure. So I'm definitely looking for price to come back down here and go to the next zone. So, and I'm going to show y'all. So I'll show you in just a second. Hold on. So from this zone to this zone is I don't want to say only 38 pips, but it's 38 pips. Okay. Now, why I would only take it to this zone for now is because there's an order block, there's a imbalance sitting there. It is a level that price came, it is a key level, as you can see, a strong level of resistance, and then it became support. Okay, so you want to take it to this order block because price may make a turn at that order block. But you can take it, you can, again, on the whatever time frame you're sitting on. I generally like the hour because the smaller time frame usually tricks you out your trade. Okay. The smaller time frames can trick you out, make you think that price is doing something else when it's not yet. So based on market structure, we're here on this swing. So price pulled back just a little bit, and that doesn't mean it's going to buy, right? Because it's not breaking any highs. You have to remember the market structure. So price pulled back into this imbalance and then started selling. So now this is our high. This was our high first. Now this is our high. So then price pulled back, broke this low. So now this is our high. So once price, did that break? Let me see if that broke. Yeah, that did break. So once price started, now you always have to remember where you are on the higher time frame. So when price is on the higher time frame, we know that we were here. So, or we were pushed up here. So we know we were getting a pullback based off of this higher time frame move, which is probably a 1 hour or 4 hour high move. You know you're going to get a pullback. Once you start breaking highs, know that you're going to get a pullback. Okay. Now, how far it pulls back, this is why I don't like counter trend trading, because you never know how far it's going to pull back. So, and I say that based off of my fib measurements, it's either coming back to the 23, which is at this key level, as you can see, right? It's coming back to the 38. It could come back to the 50%. It can come back to the 618. It can come back to the 78. It can come back to the 78 and break this low and still be a move to continue to the top side. Does that make sense? Because this is and I think this is where a lot of people get confused on if it's breaking a low. Some people will say, oh, well, it broke structure. It broke this structure here. But technically, this is not it's structure, but it didn't technically break structure because this was the high. And this whole move had to break this high. So everything in there is included as part of the structure. I know that was confusing because it was confusing me saying it. So anybody have questions about that? Anybody, let me go to the 1 hour. Anybody have questions about that? And I'm going to go to the higher time frame because I'm always saying identify where you are on the higher time frame. So based on the 4 hour, this is the swing. And then you've got these internal breaks of this high, this high, this high. So price pulled up here, broke all these highs. Once you start getting multiple breaks of multiple highs, price is likely going, especially on the higher time frame, price is likely going to you get your pullback, and then it's likely either going to your 78 or it's going to start turning to give you a change of character, right? So I'm going to erase all this so it's not confusing. This is our swing high. Again, once I start drawing my zones, you can draw your zones on the 1 hour, the 4 hour, the daily. I like the daily. Sometimes I will draw it on the 4 hour. But just know if you draw it on the daily, the 4 hour, it's gonna be a key level for the 4 hour, the daily, the 1 hour. Anything below the daily is automatically gonna be a key level for it. But not vice versa. Okay. So once I get price above my zone, like I said, I look for buys. But as you can see, this went above this zone. Can you tell me why I wouldn't have looked for a buy yet, though? Can somebody answer that?
Then close above it.
Huh?
Then close above the swing.
And where's my swing?
Did you move it?
Huh?
You want me to draw on it?
This tell me where it is. You can draw on it if you want to. So just a reminder, when I'm above my zone, I'm looking for buys. But you also have to remember market structure. So is that you, Kai? So tell me why I'm not quite looking for buys yet. You answered the question right, but
Man, I don't know how to use this.
yes. Okay. So because we're still in structure, so price broke above my key level, right? But because we're still within this last structure here, price would have to break this high for me to start looking for buys. Okay. For me,
I'm sorry, I can't delete it.
no. Oh, you hit the trash can. You on your phone? It's okay.
I'm trying it. Hold on.
It's okay. She about to draw some more. There you go. Okay. Okay. Did that make sense to everybody, right?
Yes.
Okay. So now, once that happened and it was above, I'm not quite looking for buys because it didn't break this high. So price came back and broke another low. So now I'm just going to move my swing high and let me just mark it up. Swing high, right? Because now price can come anywhere in here. Price can, you see, this is unmitigated price action right here. So price could come in that zone, which it did right here, and drop some more. It could have dropped or sold even further, right? So, and I'm gonna remove this because I wouldn't have had that
Yeah.
yet. So once price pushed down, once price tapped into that area and pushed down, tell me why I would not have quite looked for sales yet. Who can tell me that?
So will you have your cursor at, Kim?
My cursor right here? Yeah. So once price tapped into this zone right here, this little, and I'm just going to mark it as an imbalance, right? Just because there was imbalance there. So once price tapped there, and I still have my key level here, right? Once price tapped here and sold down, because we're looking at market structure, right? Price came here, so down. Price came back up here and so down. But what do I need to see in order to consider it to sell down some more?
A break
Of where?
below the last low.
Below where now? Tell me where to go, or you can mark it up on the chart.
Where you at? Where's the cursor? Let's see.
Right here.
Okay, when price came down, so these is higher. Oop. Okay, wait a minute. This one. Draw. These is higher highs.
Mm-hmm.
So maybe like once you put it, like maybe you can put a trend line down here, but
Yeah.
this is the low. So but like if you're doing on the 4 hour.
Mm-hmm. You're there. Okay. So once price made this last low, right? And then price pulled back to the institutional candle. Y'all see that? The institutional candle, the last down candle before this up move. Price didn't break this high, but price pulled back to the institutional. So once price pushed up, didn't break this low at this time, then we're expecting price to keep pushing back down, right? But price pulled back to that institutional candle and then started pushing up, pulled back, pushed up, and then that's when price started breaking more internal highs. And then finally, and let me just take it step by step. So price pulled back into this imbalance, sold down, but did not break this low. And it's not a swing low, it's just a low. Okay. And I want to.
Yeah.
Okay. So once price pushed back down here, there was a little imbalance right there. There was this institutional candle here, and I'm just going to bring it up, bring this from this institutional candle to this one, which was the last, this was the last down candle before this up move. And then price started going back above into the zone. So once price broke out of here, broke back into the zone, I personally like for price to I like confirmation for price to break above here, but because price did not break this low and broke back into my zone, back into my key level zone, right? Where there was a level of support and resistance, you could have entered on the 1 hour, the 30-minute, 15-minute. Let me see. Hold on, I'm gonna show you. Right here. It's going to be an order block and breaks of structure at this zone. So let's see. Right here. So on the 1 hour, right? And I'm just going to move this right here for now. So on the 1 hour, price broke through, and then I say I'm looking for bullish. I'm looking for some bullish momentum. So you got a bullish order block here, right? So this was the candle that broke through. This was the high that I'm looking for. So you can either wait for price to break above this high and then get in on the pullback to that zone. You can either get it, you could have gotten in here, huh?
You talking about the break and close candle or just a break?
A break and close candle.
Okay.
So this particular candle here did close above. right? And I'm going to zoom. I'm going to go zoom in so I can show you. Matter of fact, this was so this particular candle closed above, right?
Mm-hmm.
So what we know, how I trade is, so now that has broken above, I'm waiting for the pullback. The next candle was the pullback. Now, because I had this order block, and I've explained that once I get the break, you can mark up one or two ways. You can mark up the wick of that body. You can even put a limit. You can even set a limit at one of these zones at and I don't want to like assume that everybody knows, because I know some people are newer than others. The candle, when you have a candle, let's just go with this one as, let's go with this one as the bullish. Okay, so you have, when you have a candle, you have, why is it not letting me do it? Hold on. You have the wick here. You have a wick here, whether it's short or not, right? So this is the when it's bullish, this is the open of the candle. Oh, shoot. This is the open of the candle. Okay. This is the close of the candle. This is the high.
Oh, sorry.
Okay. This is the high of the candle. And this is the low of the candle. And so I'm putting that because I want to say, once you get your break, your candle close above that zone, you can mark up the high of the candle. You can mark up the open or close for this particular candle here, because it's bearish. This candle closed here. It opened here. It closed here. So this is the open. This is the close. And then this is the low of the candle. So you can mark up this order block. You can mark up the high, the open, the close, and the low. Price is going to come back to one of those zones. If you're not sure which one to choose, I say choose the optimal trader one, the optimal entry. So let's fib from here. So this broke out. You see it went up first, and then it came back down. The 78, I say always go with the 78. This came to the 88. That makes sense?
Yes.
You see the 88 is right here at the close and then the open of this order block. I'm on the 4 hour, so I'm just going to go down to the 15-minute, and I'm sure we will if it'll let me.
You was on the 1 hour.
Oh, I was on the 1 hour?
Mm-hmm.
Oh, okay. So I was on the 1 hour. So I don't know if it's gonna, yeah, it's not gonna let me go that far back. Let's see if it'll let me do it on 30-minute. Okay, here we go. So on the 30-minute, so on the 30-minute, price broke this high, pushed up, pulled back to, and I'm going to delete this zone right here. I'm going to delete this. So on the 15-minute, you would probably have more visibility as to what needed to be mitigated, right? Meaning there was probably an order block somewhere in this wick that you could have come back to, because this already this wick mitigated this this order block. So once it broke above, this was the zone we were talking about. It broke above, it wicked up and then pulled back. But if I was able to go down to a smaller time frame, there would be something in this wick that will tell you imbalance, order block, institutional candle, something in this wick would have gave you a clue to how far price would likely come back to. From this move up, there would have been some kind of clue in this wick to where price would come back to. So price came back to the, if you're never sure, always choose the 78. Always choose the 78. So if I had chose the 78, right, then I would have wanted to put my stop loss below this low here, and then taking price to my -27. So once price tapped into that 88, you would have gotten right here to the -27. Now, does that say 16 pips?
That says 3 pips. Oh, 16. Oh, at the top. Yeah, that says 16.
16 pips. Who trades AutoCAD?
I do sometimes, but
Ooh, no, I'm just kidding.
but when you trade the percentages, it's still 5%. It's still, it'll give you a lot of money still.
Okay.
But I got a question. When you do like a small amount like this, like them pips would knock me right out. 3 pips stop loss.
Was that 3 pips?
Mm-hmm.
Yep. You could have taken the 5. 5 pips.
The spread would have been like, entered, exited.
Could have taken it to 5 pips.
I wonder how that would. I
It's
wonder.
still, it's still a 3% trade. And although it's 16 pips, now I'm telling you, I'm not trading no 15 pips, no 16 pips. I'm just not doing it.
Right.
But I mean, people trade 16 pips and can still make, some money from that. That's all I'm saying.
Yeah. So if you're wanting to take it to, like, let's say the 1 hour high, because that would be like, oh, okay, intraday kind of thing. And then your stop loss would be below the last 1 hour low. Is that right? Right.
You mean this low? This?
Yes. Say you like, okay, the break and retest of that zone. If you're trading the zone, is it still like, okay, the 1 hour, the last low for the 1 hour is where your stop loss would be?
So if I was so say if I came to my chart and it was right, because I removed one of the key levels, right? I removed one of them. So say I came to my chart and I looked at the higher time frame, saw that we're in this swing right here, right? And then price pushed up, didn't break this low, and then started creating swings. And we're right here. Let me just do hold on. So say if I came to my chart and we were here, and I saw that price pulled into this imbalance, because like I said, I trade from my 1 hour. What I would mark up. This is where I would be marking up. So I would first mark up this zone here, this 1 hour zone here, okay, because price came there and reacted. And then, wait a minute, hold on, because I like to mark up where close to where price is. So price came and broke this high. I can easily see a swing here, right? So now I am
waiting for the pullback of the swing and then entering
waiting for the pullback.
78.
And then because this is my 1 hour zone, so price pulled back. And if you want to fib that move right here, price pulled back to the 78. I mean, and wicked, and then started breaking these highs, right? But what I want to do is now see price break above my 1 hour key level, my 1 hour zone, which it did. And then I would like to see it pull back into the zone. So based on this push up, this impulse move up, I would love to see it come back to this zone, but a lot of times it's not going to come back to the zone. And this may be a trait for AUD CAD. I know for GJ, I can almost count on GJ pulling back to my zone. Because I know GJ. I know US 30. I know US 30 probably won't come back to the zone. I know that US 30 is probably just going to come into this imbalance that's here.
That 50% mark.
Exactly. And then leave. So if I were trading AUD CAD, if I was expecting it to come back, it didn't come back. It came to 50%. But now that I see that it came to the 50% or the consequent encroachment of that imbalance, and then what did it do?
Hit another.
It broke structure. It broke this high right here. It broke this high right here. So now that it broke that high, I'm either looking for see AUD CAD. I don't like this pair. I'm looking for it to come back to the order block or the institutional candle, which was the last down candle before this up move. Now, would that have, I don't know if that would have, I don't know if spread would, no, that wouldn't have gotten in because this right here. Now, I do believe ICT says because these two candles are bearish, you use the highest point that would have gotten you in. But I personally would have marked this right here. Personally. So I wouldn't have gotten into this. Okay.
Maybe spreads would have triggered you in.
Maybe if it was like a market. I don't know, market. I don't know.
Yeah, 50% chance, huh?
50-50. Once this broke, I would have been looking for price to pull back to this order block. Okay. Say it missed me on this one.
Mm-hmm.
Okay, so now this is my next high. So now I'm looking for price to break this high. Although price gave this bullish order block right here, you don't know if price is going to give you a bullish order block to then give you a bearish order block to come back down here. I'm looking for a break. So now that it broke, I'm looking for price to come back to hold on, I did something wrong there. This was the break. No, we would have gotten in this trade right here. And I'm telling you why. Because this was the high. This was the break of that high. I'm gonna act like we don't see this yet. This was the break of that high. So I'm looking for price to come back and retest that break. So that was the break. This was the retest. And on a 15-minute, 5-minute, you would have gotten what you needed to see. So you could have either set your limit here. You could have set your limit there, put it below this low, which is 11 pips. And then you could have taken it up to, let's just fib this move. That was a 2% trade. Again, I wouldn't have taken that trade, but it was a trade to be taken. Okay. Not for 23 pips. And like I said, if you want to like build your account, if you're building or stacking your building the equity, you can definitely take this trade. It broke the high, it pulled back to that break, it retested that break, and then continue. So the
That
negative
green candle, the high, instead of the red doji candle. Why is the large green candle, the high, and not the next red doji wick?
because because we're bullish in these moves, I'm looking for the break of the bullish highs. Now, if this was a bullish candle, if this was a bullish,
Oh, I see. Okay, yeah. Mhm.
then this was a bullish candle, but I'm looking for something to break. I'm looking for wherever the break happens of this high.
Got you.
If this had broken this high, then this next wick would have been my high.
Got you.
So if this was bullish, a bullish break, candle close, then that would have been my next high. Because this could all have just been rejection to continue selling.
Mm-hmm.
But once we got this break of this candle, then you could fib the low to the high. And you don't even have to fib. And the only reason I'm fibbing is because I need to know how far I want to take trade, right?
Right.
But if you wanted to at least take it to these highs, that was 13 pips, a 1% trade. This was 23 pips, a 2% trade. And you see, once price got to that negative 27, are we still on the hour? Yes, we're still on the hour. So at this 1 hour candle, you tapped into your negative 27. If you're watching the trade, or let me say this, if you're trying to sleep, then just set your TP. If you're watching the trade, and I'm watching on the hour, you have this 1 hour candle that closed above this high, right? So I probably would stay in the trade. Then you have this next 1 hour candle that didn't break. And when I say break, close below, that didn't break any lows. It wicked below. It wicked this low that didn't have a, did I have a wick on there?
No.
I
Oh
can't.
wait, I can't see. Hold on. Oh yeah, it did have a
It
little.
have a wick, but
Mhm.
price just wicked the low. It did
Mhm.
not close below. So I probably would have stayed in the trade. The
Mhm.
next candle, it gave a bearish candle, but there was no close below, right? There's another bearish candle, no close below. And then you have a bullish order block. So you could have stayed in this trade because price is likely going to continue going because there was no close below these lows. There was no close below this candle. There was a wick below, but there was no close below this candle. So then you just stay in the trade.
Okay, so now when we're looking for closes, we're looking for a close below any wick.
So this was, so we had break of this high, right? And then we haven't had a break of this high yet until that candle right there. So this candle, this was the high. There was no close above or below this candle. Because this candle closed above here, now this is the candle we're looking to close either above or below.
Mm-hmm.
So price wicked this high, did not close. It wicked this low, it did not close. And I'm just going to move this right here.
Mm-hmm.
Right? So then we got so pretty much this is this 1 hour candle is
Mm-hmm.
is the range that we're looking at right now.
Okay.
Okay, we know it tapped out -27. If we look at market structure, we can see that the last swing is from here to here. Right? That's our last structure. Okay. But if we're going by every 1 hour candle, this candle broke above this high, closed above this high. So now let's see how the range is between this one candle that broke above. Like I said, this wicked above didn't close. It wicked below, didn't close. Then you had this bearish candle here, did not close. It wicked above it, didn't close, didn't come to this low. You had this next candle, did not do anything. Didn't close above here and didn't close below here. Then you got a bullish order block. So price is likely going to keep pushing up because we didn't get a close below this low.
That's the mama candle.
So now so if you wanted to, you could have taken, but it's a lot riskier. So you want to wait till price close above, right?
Mm-hmm.
Close above here. So price is either going to push up and pull back to the zone. It might give you healthy price action to pull back to this candle here, to this wick here. So let's see what happens. Let's see what happens. So it came back, it pulled back, gave you a bearish order block. So we broke above this high. nothing broke below. Now, what's the next candle? We have this candle here, and then we have the candle high and then the candle low, right?
Mm-hmm.
What we do know is that it broke above this high. So I'm just going to delete that so we don't get confused.
Mm-hmm.
So now what is the next candle going to do? It wicked below, but it did not close below. Okay. So now it's like you're trapped between, before you were trapped between these two order blocks.
Mm-hmm.
Now you have a bearish order block. It's going to break out either one way or the other. So you just 1 hour, you just wait to see what it's going to do. And it broke out the top. So longer as price is bullish,
Mm-hmm.
I don't get intimidated by the bearish order blocks or
Mm-hmm.
pullbacks,
Mm-hmm.
because this candle broke above this high and pulled back. So just know that every time you get a break above, you're going to get a pullback. As long as some pullbacks are not breaking these lows, I'm not tripping off the pullbacks.
Mm-hmm.
So now you got a break above. So price might pull back to there and keep pushing up. Let's see what happens next. It didn't come all the way back, but guess what it did do?
Give us another high.
It came back to the break where this high broke. It pulled back to that zone to keep pushing up.
Mm-hmm.
Yeah.
Yes.
So what are we looking for? It pulled back, it broke above, it retested and keep pushing. So now the next move, let's see what happens. We got another pullback. Okay.
Ooh.
You see it pulled back. It broke this high. It pulled back. It didn't break any of these lows. And then gave you what kind of candle is that? I don't know. Is it a pin bar? I don't know the candles. I don't. Huh?
The shooting star.
Shooting star. But let me just say this. Price tapped your negative 618.
Mm-hmm.
So instead of the 23 pips, what did I say? The 78. So I think we did it from here. We did it from here last time. Then we covered this low for 13 pips. So now instead of the what was it? 16, I thought it was 16 pips. I can't remember. But once price broke this high here, price pulled back and then went to instead of the negative 27, it went to your negative 618. So you at least got 34 pips out of that.
Oh, I thought the stop loss was at 100.
Was it at 100?
I think so. And then we got in at 78.
We got in at the 78. You're right. Yeah. So I knew it was something.
Yeah, that would make it higher than 5%. Yeah.
Because we put it was it there? You sure?
We put it at 100. Well, our stop loss was at the low.
Okay. Low would have been here.
And then our entry was at the 78.
10 pips. We're saying 10 pips. And our entry was at the 78. Okay, so now
something like that.
So that was 3% at -618 is 4%, almost 5%.
It's a good week.
Mm-hmm. And that was in a matter of, let's see, if we got in at the 78 and then got out at the 618, that was in a matter of 16 hours.
2 work days.
Mm-hmm. Yep. That was on a Thursday. And by Friday market close, it tapped you out.
Market close or market open? That's 5 a.m. or
Oh,
p.m.?
5 a.m. That's market. That was Friday morning.
Right when
London
you woke up.
London session.
Beautiful.
Mm-hmm.
Woke up to all blue.
Yep. Yep. I don't know why I thought we entered. Okay, but yeah, that's still the same. So same thing. And I think I had another zone up in here. That's kind of how we got started right here. Up in here somewhere. So, and I think because I said if I woke up and none of this was here and I had this here, this would have been my high. So this would have been a zone that I marked up, a 1 hour key level that I marked up. So once price, that's it right there. That was it right there. So once I marked up if I had gotten up and price was right here, I would have marked this up as my 1 hour zone. Once price broke through it, I'm expecting price to come back to the zone, which is what it did, right? Came back to the zone, and then I would have been looking for it to go to the next zone. This would have been my next zone. So that's where I'm really looking for price to go to, from one zone to the next zone. Everything else in here would be a stack up into this zone. And what I mean by that is just what we did. Once price broke this high, then this would have been my one stack. Once price broke, pull back to the stack. Then once price broke, pulled back. So I would have been stacking. So once we had this first move here, this was really the first move we were talking about to this zone. Okay. And then the next stack would have been from here. And then I would have covered this low up into this high. Okay. And then as I get closer, I'm not going to do too many stacks to the zone. So this low up into that. So that would have been my stack. Now, did that play out all the way? Let's see. Oh yeah. Boom. There it is. So I would have gone from one zone to the next zone. That is my zone to zone strategy. That's how I trade zone to zone. Pull back, break, pulled back, break, pulled back. And it wouldn't have stopped me out because you got to cover your lows, and then you take all your TPs to that zone. So this was a 3% trade. This was a almost 4% trade. This was a 3% trade, and this was a 2% trade. So 3, 6, 7, 8, almost 9% trade in those 16 hours. but you have to start from a zone and then start stacking from that zone. And your target is always going to be to the next high, to the next zone. And and my recommendation is to take your money, take your TP, that was 47 pips, 33 pips, 20 pips. So 47, 67, 97. So that was almost 100 pips to the next zone. And then that could have been your move for the week. And then if you want to trade it up to the next zone, which would be, this would be my next zone here. And as you can see, it broke through this zone. So I would be looking for price to pull back from this zone to the next zone.
That's that shooting star, gave it right to you.
To the next zone. So let's see how that played out. And there it goes. And how could you stack that? Once it got back to the zone, you started giving bullish order blocks. It gave one bullish order block, another bullish order block. So you could have traded from this zone. This could have been the first entry, right? And you just take it up to this zone, take it below these low, and then you can start stacking. So you can stack here. Price broke there. And then what did price do? So once this was the zone here, price broke, it came back to the zone. Okay. And then once price broke this high, it came, did it tap it? It did. So it came back to the zone. So that could have been second entry. But again, you got to remember that, and I would have put it below this low here. You just take it up to the zone. That was 18 pips. And then you have the next high. It broke, it pulled back to the zone, pulled back to the order block. Remember, your order block, you can do the high, the open, the close, or the body. So it pulled back, then gave you bullish momentum. So if you wanted to take it from there, it didn't pull back to this zone here. Well, after this break it did, but that was a little drawdown. But I would have waited for a push, more of a push out. But because it's so close to the next zone, I would have said don't trade it anyway. So you had this entry and this entry. Almost 3%. Almost 3%. That's almost 6, that's around 6%. That would have been more than enough. Again, I probably wouldn't have traded this for 30 pips, but a trade is a trade. The trade is the trade. And then once I got there, let's see, from here to here, it pulled back. So I guess you could have traded it up to the negative 27. I don't know how far it went up, but Let's see how that played out. It tapped, yeah, it took you to the negative 27. So that was now a 4% trade. No, not that one. Oh yeah, that was 4% trade. And this was almost a 5% trade. Because the stop loss was less. So, and that was a 9% trade. And then that entry took from here, it tapped in to the negative 27, which was right here. That would have taken 2 days. Is that 2 days? Yeah. So that was another intraday trade move. So when I mark up the daily, that's more of intraday swing trade. If you mark up the 1 hour key levels or swings, those are more intraday trades. Any questions on that? No.
Sounds good.
Huh?
Sounds good. Thank you.
You're welcome. And just FYI, also want to add that based on the higher time frame, okay, so you pulled back to I think this was around the 78, 88 of that move that pushed down, didn't break the low. So now that you're breaking these highs, you can count on getting the pullback to somewhere. I'm just gonna erase all this so I don't see it. You can count on getting a pullback to the 78 somewhere. So price will probably pull back to this little key level here, which is in alignment with the 78. Because as you can see, price tapped here, tapped here, tapped here, tapped here, almost tapped there. So this is a strong key level. So price will likely pull back to the 78, maybe the 88, but I don't see anything down there. But on the 78, here's liquidity right here. Right? You see these two equal lows right there? So price will likely pull back into this zone before taking off. Did I finish this? Hold on, maybe I'm. Let me speed it up a little more. Oh, so what we're seeing now you can just keep moving your fib until price. And as you can see how it broke through the key level, came back to the key level, bounced here. So now I would be looking for a price to push up here and break through. You have to wait. Let me just say that. Hold on. You have to wait. So once price breaks through a key level, right? So how price broke through here, you have to wait for price to come back up to here to show you what it wants to do. And when I say that, you want it to pull back So if price had pushed up here, pushed here, and then broke these lows, then I would have been looking for the entry to sell. That makes sense?
Mm-hmm.
So it would have had to push up here, break here, or even here, and then I would have been looking for sales. But if I'm waiting on my 1 hour and price pushed up, reject it, reject it, reject it. If you're patient, it's going to show you what it wants to do. But you see on that 1 hour candle, it broke through. There was no break below and there was no break above. So you have to be patient for price to show you what it wants to do. And it broke above. So now I would love to see price pull back here from this zone back up to this zone. Now this is my kind of zone right here. This is my kind of zone. That's a zone right there. 220 pips.
Mm-hmm.
So, so if price gets to that zone up there before it pulls back, then I don't, then I just miss out on that particular zone. So now that price, based on market structure, price pushed up here, pulled back here, pushed up here, and then broke this low, these lows. So now I'm kind of thinking that price may pull back and then start selling. We're gonna see. Or it's gonna keep going. And there it goes. Because price broke structure. And let me just stop right here. Because price broke this structure, price broke this low here. So I look for price to come back and then at least take out these lows. But as you can see, it pulled back into, there was a little, was that an imbalance? There was liquidity there. This could have been a 1 hour key level. But it didn't come back down there. But it did push up and then push back down. So, and then it pushed back up. So you might not have gotten, if you were trailing your moves, then you probably would have gotten stopped out based, but in profit. It should have been in profit because this was the last move. Price pushed into it and then sold back down. So you would have been putting your stop loss as price was breaking the lows. You could have put your stop loss. So you would have gotten stopped out in profit. So from here, from this here where price broke, pulled back into your supply zone, you would have gotten stopped out at like 65 pips. Unless you were really moving from once it broke here, you could have moved it here. Once it broke here, you could have moved it there. That would have been, you would have gotten stopped out at 103 pips, which definitely would have been okay with me. So that is the zone to zone method. Is Leisha still on here? No. So this was based on some homework assignments they had. When I say they, I mean the elite group. Because they had to mark up their higher time frame key levels. So that's how we got on this subject today. So this was, oops, I'm tripping. So this was the key level here. And again, I just like to look at my higher time frame swings where price came and was once support and then became resistance. And I like to, if it doesn't look clear to me, if I have to squint to find it, as you can see, it was here, 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 here. If I have to squint to find it, then it's not the right one for me. It's not the right key level for me. So as you can see, price is pushing up to this level, like a magnet to the zone, right? It's pushing up to this level. So once price gets here, if I was to trade AUD CAD, I would be looking for price to either break above to continue to the next key level, which one is here. And then the next one is here. And just trade it from one zone to the next zone. And that's why that's 189 pips. Let me do this. This was 189 pips. This one is 197 pips. Now, if price gets up here and decides it wants to break structure back to the downside, then you would trade it accordingly. So you would trade it back down to here, which is 300 pips. 337 pips. And you just look for your break of structure or on the lower time frames. And I look for it on the 1 hour. So based on here, here's our structure. This broke this high. So we're looking for here. We're looking for this pullback, for this pushback up to here. Any questions? That makes sense? And you see how it tapped into this order block and then started moving. Tapped into this order block or the institutional candle and started pushing up. Pushed up, pull back, pushed up. And what is that fib? That's probably the 61878. It was a 78. 78, and now it's moving. That is why I love the 78. Any questions?
So if you're taking this trade from zone to zone, you're putting your stop loss at the previous internal low or
So
at the
if I'm stacking in between, so technically the way I teach it is really don't, well, for beginners, I say this. For beginners, I say don't mess with the in-between. Like from here to here, don't mess with the in-between, right? But if you understand if you understand market structure, right? Like this break, this high break of this internal high here, the price comes back and then breaks the high. If you understand market structure enough, then you can trade the in between. But the best move is from the key level. So once price broke back in, because if you got in at the key level, everything else, price generally doesn't come all the way back to this level, and you'll be in profit from here to here. So even if you did take, trades, like as you started stacking, and say it pulled back on you, your equity, you won't be in, you might be in drawdown on that one trade, but your equity, because you're going to be in profit on your initial trade from the zone, you'll always be in profit. So with that being said, yes, you want to, so say price came here, gave these double bottoms, and then started breaking this high here. Okay, so price started breaking that high. So you want to definitely from the high, and you want to put it below this low. I would probably put it below this order block here. It's like 25 pips. And then your target is this zone right here. Okay. So once that happened, then you want to start stacking. So price broke this high, price pulled back to that. And once you got more momentum, you can wait for it to break this high if you want. This institutional candle here, and then take your next entry. So if your next entry was here, you would put your stop loss below that low, and then you would take your profit up, set your TP up to this high. Okay. Now, as you can see, when this started pulling back, you probably were at entry, but it never broke your low. So once price broke that high, the same thing. You would just start stacking. Once price pulled back into that zone and didn't break your lows, right? Once it broke this high, actually, let me do the internal first. That's the external. So once price broke, you see you had market structure. You had here, 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 and here. So once price broke that initial high, which was right here, right? Price pulled back. You can look for your institutional candle. And let me just remove that here. So your institutional candle would have been this one here, right? But you remember you have imbalance here, which price can come back to, which is where it came back to, right? You had the imbalance that was in between here and here. Which price came back into, and then gave you, you see you have this bearish order block, price pulled back and broke above that bearish order block. So for me, that means that price is ready to move. So once you broke above there, We're gonna bring that all the way over here. You can wait for price to give you your bullish momentum. And then you can get in there and then keep. That would be your next stack. And I recommend don't do any more than 3 stacks, but so now price pulled back to this zone as well, this order block. And I guess if you want to do one more stack, I would need for it to break this high, which is what it's doing right now. But then you have to remember you got to cover all this here, this low. That's 69 pips. That's a lot. That's a lot. Or you can just bring it to this low, 29 pips. And then that would be all the pip. That would be all the stacking I would do. Normally I only do 3 stacks or 3 trades. One from the zone and then 2 stacks after that. But that's how you maximize, how you would maximize from one zone to the next zone. Either you're gonna have this one trade in to the next zone, or you can put in another stack or 2 to the next zone. But yeah. So if price comes back now, if you don't want to put a stop loss, it's up to you. It's up to you. Because remember, you're going to be in profit from this trade anyway. It's up to you. I'm not going to say don't put a stop loss. I'm just saying
You can put an alert there.
You can put an alert. Exactly. So yes. So now I'm expecting this trade to keep buying up to this high. That's what I'm expecting. And then once it gets there, you allow price to show you what it wants to do, and then you trade accordingly. And then that's how, oops. And then also with my zones, I also do, like Tammy was saying, like I'll just draw my trend line. Let me draw my zones back real quick. That's one zone. This is one zone. This is one zone. So I would draw my trend line. And then once price got here, again, if it broke my trend line and broke levels of structure, lows, candle close, then I would wait for price to pull back to my zone, show me that it wants to sell from this zone, given more chop or change of character. And then I would set my limit from that zone to the next zone. So that's how I trade the zone to zone. Any questions?
A quick question about GJ from this week.
GJ, let's see.
I got knocked out by some wick.
So wait a minute, am I looking at GJ right? GJ. Is this right?
Mm-hmm.
Wait a minute. Are you sure?
That's the weekly.
This is not right. I'm like, wait a minute. I know GJ. This high has already been broken. So I'm like, wait, what? The 23rd.
Oh, you talking about the
Hold on.
the current
You in
chart.
replay.
You in the yeah.
But why would it replay GJ when I was on AUD? That's so weird.
Oh wow.
That is weird.
Look, she know her baby.
I know my pair. I know. Where's the how do you get rid of it? Jump to real time. There you go.
Mm.
I don't know how that happened. Jump to real time chart. I don't want it to do that. Hold on. Okay. I want out. I want out. There we go. There we go. There we go. So let's go to the monthly. So price has tapped into the monthly order block and has pulled back. Now, let's look at structure. We had this push up, we had this push back, pull back, and this push up. So we are in the swing. We are in the range of this leg here. Okay. So let me fib that move.
Dang, it went right into your order block. I mean,
the order block. So we're at the 78.88. You see how it rejected? Let's go to the weekly so we can see it a little bit better. It came to the 88 and has pushed up. Now, price could push back down. It didn't break these lows, right? So price could push back. It tapped into this order block. So price could push back up to, and let me draw it so I can have a key level here, right? So price could be pushing back up to this zone. And this is why I like to draw my key levels, because then I know where price may react to. Because as we see, price pushed up here, it reacted, right? Price pushed right here. If I pull this over, let's see, hold on. Let's see. Let's just pull it over right here. Okay, so price tap there, reacted. So that's a strong key level for me. So this price could push back into the zone, either break above and keep buying, or come to this zone, react, and sell back down to this zone. How many pips between each zone? A lot. Okay. A lot. If we had been in this, well, I think some of us are in this trade, this buy up. We're looking at possibly 1,200 pips, but my thought process, because I'm also thinking about not just market structure, I'm thinking about price action. And what I mean by that is these wicks, price could come up to here and then sell. Like you see this zone where these wicks are is a I don't want to say a minor level of support and resistance, but it's a zone where price came, reacted here, and then came and reacted. So it is a level of support and resistance, right? So price could come up there, up to this. I'm just looking at the wicks. That's just how I see price action. And then start selling. So it doesn't have to come all the way up here. Remember, I'm on a higher time frame. So sometimes you can see those zones clearly. Sometimes you have to go down to a smaller time frame to see the zones. So if that was there, you can see like that's a level of support resistance right here.
Mhm.
Okay.
Mhm.
So, and as you can see, so this was a 4-hour. I know when we were on the call with Todd on, I think Tuesday, my guess is that was going to come to this 4-hour and then start selling back down. Now, it did come to that 4-hour. It did start selling, but what hasn't it done yet?
It has not broken the previous low.
Any of these lows. So price can pull back into this imbalance, or back to this break of this high, and then start pushing back up. That makes sense?
Yes.
Mm-hmm. So, or it can start breaking all these lows, pull back, and then sell back down to this zone. So once price gets here, you would need to just wait and see what it does. Let's go to the 1 hour. So price broke these highs. So I'm expecting price to pull back at least to this zone. I just don't know whether it's going to come here, start breaking structure to continue buying up, or if it's going to come here, start breaking these lows, pull back, and then start selling back down. And if I draw my trend line, like it's hugging, honestly, I'm really looking for a sell. And why I say that is because y'all know how I'm always counting my pushes. This is 1 push, 2 put. I'm waiting for a real deep like sell. It already tapped into my order block, my monthly order block. So I'm waiting for a big old push to the downside. I want this is what I want. This is what I want now. Whether I get it or not, I don't know. But this is what I really want. I want to push all the way to the 78. That's what I want. That's what I would like. But if it doesn't give me a push to the 78, then I will keep buying it up to the negative 27. Well, no, not to the negative 27. My bad. I will buy it up to this zone right here, up to these highs, because price could, although it's breaking these internals, like I really wanted to break these lows here, like this. See all these wicks in this zone right here. I want to see it break that zone. If it doesn't break that zone, then I I'll just keep buying it. It could come up here and give double top. Right? And then sell down. But I want to see it come, when it sells, I want to see it come to the 78. That's what I would love to see.
Mhm.
And
That's
again,
me.
if it only taps into this imbalance and starts selling, then once it breaks this zone and pulls back, then I'll be looking for the entry to down to the 78.
Gotcha.
And maybe I'll get out at the, because this is a key level here because I'm on the weekly. So maybe I'll trade it from this zone to this zone first,
Mhm.
which is a lot.
Mhm.
Not a pips.
Mhm.
And then if it breaks through that zone, I can trade it to the 78. Now there's a key level that's lower than, like I don't see a strong key level at the 78. I mean, this is a level of support and resistance right here. But I don't normally draw my zones in between, like it's gotta be at a high point, the low point.
Mm.
So that's not normally how I draw my zones, but I'm still cognizant of there's imbalance up in here. Price never came back to mitigate all these green candles.
Right.
So the thought process is to at least take it to the 78, which is still a lot.
Mhm.
So that is what I'm looking for GJ. You said, were you in a buy or sell?
Bye. But my stop loss was too tight for where I am.
Oh, okay. What did you, was it an ICI strategy?
No, it was just like market structure, like kind of like zone to zone.
Okay.
But like more so like to the next zone, I guess. Yeah, from the left. So I looked to the left. The same kind of zone that you had marked up, where the order block was, the next order block. That was where no, the top one.
This one?
No, you're on the daily. So I was just like way after that, like sometime this week I got in.
Oh,
Hmm.
okay. Let me go down to the 4-hour.
Yeah, I was like somewhere in between, somewhere in there. Yeah, somewhere in between there.
And you got it for the buy.
Hmm.
Okay. So this would have been, once this pulled back, broke.
But I was on like the 1 hour, I think.
Okay.
And I had my stop like my stop loss got wicked out by that middle red
Right.
wick. The one after that. Yeah, I think that one. That's the one that whipped me out.
So tell me why. So what, you were on the 1 hour?
And way too late.
Huh?
First, I said, first of all, I got in this trade way too late.
But yeah, this was the order block you should have been gunning for. And then your low would have been here.
Mm-hmm.
And then you would have been, woof. You
All
would have
right.
in the money.
Yeah.
Mm-hmm.
So I was I wanted to get in this trade earlier in the week, but I got in too late. But then when I got in, I didn't I didn't get in when I was supposed to get in, like where you said like on a discounted pullback. I didn't.
Mhm.
I was like stop loss was a little bit too tight,
Mhm.
and then that was my own fault. Yeah, and then but like you said, like now I understand what you mean by institutional candle.
Mhm. Yep, look for those order blocks. Price is definitely gonna come back.
Mm-hmm. And sometimes I get lost on the 30-minute um within these, like, what is it called, shoot, what is it called, when it just goes back and forth.
When it's consolidating.
Yeah, I sometimes I get lost in the structure when it's consolidating.
Well, always if you could see, like it was consolidating here, right?
Mm-hmm.
And you know this is your current low, like price broke this high. So you know this is your low. That's pretty much your protected low.
Mm-hmm.
So as long as you are not closing or breaking the protected low,
Mm-hmm.
and you're going and you have higher highs and higher lows. Oh shoot, hold on. Like this. And you have higher highs and higher lows, then you should always be looking for the buy, right? And you want to look for your buy close, look for the unmitigated zone. So say for instance, when this broke this high, where's the unmitigated zone? There's imbalance here. It's an order block here. There's imbalance here. As I scroll down, everything else has been mitigated. So this is where I would expect my price to come back to. Now, you would have to put your low down here because that's the protected low.
Mm-hmm.
But price came back into that unmitigated imbalance and then took you up to here. So now, once you've broken that high, where can price pull back to that's unmitigated? You have an imbalance here, you have imbalance here, but those are not, you want to find the zone that's in your optimal trade, that's at your optimal trading entry. I know, everybody talks about price coming back to the 50%, 618. I get it. I understand it. Okay.
Mm-hmm.
But the optimal trading entry for me is my 78. 78, 80. 78 is it for me. Even if it goes to the 88, I'm okay. But the 78 and the fact that the 78 was in alignment with this order block that was unmitigated, that's the move. That would have been the move for me. Like even because as you can see, this did not tap into it wasn't until this candle pulled back.
Mm-hmm.
And people will say, oh, it almost tapped in, that's enough, it filled in enough. So, I want it to come back to the order block. If it don't come back and get me, then guess what? Then I just missed that trade.
Mm-hmm.
And then to take it from the 78 to the negative 27.
With your low at 100, with your low a little bit below the 100, that is a really good RR.
Mm-hmm. Oh, shoot. I forgot I had that on. That's why it's doing it. So that would have been from the 78 below your 100 to your negative 27 is 212 pips, 4%, almost 5%. And if you're on the 1 hour and you're watching your chart, because this was at 8 in the morning,
Mm-hmm.
and the fact that it blew through within that hour, went to the negative 618. Once that closed, I would have gotten out. Once this candle closed,
Mm-hmm.
I would have gotten out right here.
Wow, what
300 pips at almost 7%. Huh?
what a beautiful trade.
Mm-hmm. Yep, longest price is not breaking you, and that's why all this will trick you out if you don't know market structure and understand where your lows and your highs are.
Yeah.
Because this will make you thinking it's going to be selling all because it didn't break this high. It'll make you think that it's selling all the way down here, right? Then it comes give you a bullish order block and it's making you think it's buy. Just if you got in at the optimal trading entry, let it ride until this either this high got broken or this low gets broken. Once this high gets broken, I mean, and you're trading a trend. So as long as it's bullish and you got higher lows, higher highs, keep buying. Buy until you can't buy no more.
Mm-hmm. Mm-hmm.
So yes, that was definitely a beautiful trade.
Oh my goodness. I'm missing out. I'm about to come join Elite.
So let me just say this. Once price breaks a high, always look for where price can come back to continue the trade. That's the key.
Yeah.
That's the key. And then once, if you want to try to trade this back and forth, like this is why I don't trade a counter trend, or you can set you a limit or an alert. Me, I'm normally gonna set a limit. Because this hit what time? At 11, 10
11
o'clock at night. I was at like 10 at night.
Mm-hmm.
I may have been looking at the charts at 10 at night, but then again, I may have been knocked out. But I'd rather be knocked out, set a limit, set my stop loss or hedge, and then wake up at what time I normally get up, around 5:36, and been in profit.
Yeah.
And then by 8, I would have been done for the day right here. I would have been done. Like, I wouldn't have looked at the charts. The elite members would have been like, Kim, what you see? I would have act like I don't see them talking. So I'm just playing. I know they on here. Like we be talking to you and you'll be answering. No, I do be answering. Sometimes I don't see the trade, but then sometimes,
Yeah, that's so nice.
so yeah. Yeah, because I don't normally look at the chart at the during the Asian session. I don't normally get on the chart.
Mm-hmm.
So if I see this setup, when did this break happen? At 2 in the morning? What was that, on a Tuesday? I try to look at it before I go to bed. That's what I do try to do. Now, at 2 in the morning, now I will wake up for the 1 o'clock candle. The 1 o'clock, the 4-hour candle.
Mm-hmm.
That's the one time I do look at the chart. I will look at the 4-hour candle. And then if it don't give me nothing, then I just go on to bed.
But
But
I also the alerts that let you, like, if you're on the 1 hour, I could be like, okay, let me know when this 1 hour closes above this horizontal line.
yes, you can set your alert, that you can set this alert for a bar close, crossing up on the 1 hour. Yep, that would have definitely worked out too.
I love that.
Mm-hmm. Did everybody get that? Did everybody see that?
I didn't get that, Kim. This Adrian. That alert.
Yep, so this alert, this happened
Oh,
at, this candle closed above this high at 2 in the morning.
okay.
So instead of, if you don't want to sit and watch, right?
Okay.
You can edit. I'm gonna take it off. Hold on, let me trash it. You can set an alert, whether it's on this, whether it's on the trend line or whether it's on the horizontal ray.
Oh,
And you can edit to once the 1 hour, longest, depending on what time frame you're on, right?
right.
So for me, I want to see it close above on the 1 hour. So I can, once that bar closes, once this candle closes, 1 hour candle closes
Mm-hmm.
up.
Okay.
So meaning, so if I don't put it up, so this could have wicked and closed below, right?
Yeah.
And it still would have sent me an alert. But I want it to alert me once it closes above. So once it crosses up and
Okay.
closes, once that bar
Horizontal.
closes, and then you can create an
An alert.
alert. So
I never knew that. I thought it just works for the MA crossings.
nope, nope.
Oh.
So once that candle closes above, you can say, hey, okay, this closed above my high. Let me see what would be my optimal trade and entry. We are bullish. I want to look for my optimal trade and entry. I would have fibbed that move. I would have seen that the 78 didn't, I would have seen that this candle didn't tap into the 78. Maybe price will come back. I would have set this alert and this limit and went to bed. Be honest.
Right.
Be honest with you. I just would have set the limit and went to bed. So, and that would have been the move. That would have been the trade for the day.
Thank you. I didn't know you can set alerts like that on the
Yes.
trend line. Thank you.
Yep. So you can do it. So and vice versa for selling. You can do it crossing down.
And then,
I've never used any of these before. The greater than, less than, moving up, moving down, moving up percent. I've never used those, so I don't know how to use those. I just know how to use the crossing up, and the crossing down.
okay. Of the horizontal ray. Okay. Okay.
And the reason I use the horizontal ray is because if you use the trend line, so say if I set the trend line here, right?
Mm-hmm.
And price did not break above till after it got past this trend line, it's
Mm-hmm.
not going to trigger. It has to have touched that trend line or
Okay.
closed above the trend line. But if
Right.
say price came up here and then started closing up here, like the trend line is all the way over here, it's not going to trigger. So that's why I always use the horizontal ray.
Okay. Okay. That's good information.
Yep. And then that's it. Any other questions?
Thank you so much, Kim.
You're welcome. You're welcome. All right, y'all. Well, y'all have a great weekend. I guess I'll see y'all on the call tomorrow. And as soon as this finish loading, I'll send this over to Ty.
Thank you, Kim.
You're welcome.
See you tomorrow.
See you tomorrow.
Bye.
Bye.